Hello everyone, my name is Grega and welcome to our new free video update. It's been some time since I published new video, so this time I will talk about US dollar, 10-year US notes, dollar and Mexican peso and crude oil. So as you know, US dollar is in a very strong rise for the last year or so, for the last few months in particular. Of course, this has a lot to do with very hawkish fifht, who will actually remain hawkish, especially after latest non-farm payrolls report. They even understand that this hawkish policy will at some point hurt the economy. Maybe this will be seen on a much bigger scale next year, or maybe already later this year. So they are fine even if jobs will get worse in the upcoming months. In fact, they are looking for interest rates for, I think that next year they are targeting for 4.5%. So we are still seeing US dollar moving higher obviously with the US yields, because if hawkish Fed projections means that speculators are betting on higher rates in the future, and that's why we are seeing these rates moving to the upside. However, I still think that there is a recession risk. We see a lot of issues in the Europe, and of course we could see this current very hawkish policy, we could actually see it moving towards the end of the cycle. So I still think that at some point maybe Fed will be forced to change their policy, or maybe a trigger for a reversal in trends could be potentially that speculators will bet that hawkish policy from the Fed is in very late stages. Now, if you look here on the 10-year US yields, you can actually see that this market is in a fifth wave. We've been looking for this fifth wave rise since the market broke this downward channel after ABC drop in the wave 4. So it looks like that we are in a fifth wave. What is very important to understand is that fifth wave is the final wave within a higher degree trend. So if you look closely here from August 2021, when actually, or later that year, when actually market broke to the upside since November, when Fed announced this hawkish policy, that's when market started to accelerate into the upside within this impulsive price action. So now when we are in a fifth wave, we have to consider that we could be in the late stages of this recovery. Of course, this is a daily chart. It may take a lot of time before we see any real reversal in the trends, but it's very important to understand in which phase of the current rise on these US yields we are. We could see only a free wave of a pullback, something like similar like we have seen back through June and July, but even this pullback could be quite significant and could bring the US dollar down to the downside as well. So if you look at the correlations, obviously the US dollar is also very strong. So while the S&P 500 obviously on the other hand is hunting potential lower supports. So I still think that at some point the US dollar index will see a major reversal. Now, if you look here closely on this monthly chart, you can actually see that we are trying to project or compare the current price with the previous one that started from 92 and lasted till 2001, and you can see the very similar price pattern so far. Of course, this doesn't mean actually nothing unless you see a reversal from that, lower from that level. So still, I think that this is quite interesting area, potential resistance here around 114, and then you have a next one or 120, which was obviously here at the high from 2001. We are obviously right now at this parallel channel line, so obviously this is a very important potential resistance level. But as I said, these are longer term charts and they may take a lot of time before the market would really turn around here. Now, if the US dollar, or when the US dollar will potentially turn to the downside, the question is, what should we look for? Okay, so of course, in such case, you have to consider the intermarket analysis. And if you look closely here, you can see that I have some of the different currency pairs that I'm comparing here, and you can see that here we have US dollar index is in red, and we have here is cable, actually inverted scale, of course. Here we have sorry, that was US dollar index. Then you have also dollar NOK, okay, and then you have also Aussie, also inverted scale, and you can see that they are very they have a very strong correlation, obviously, okay. But now let me add this one. Well, this one, as you can see here, is much weaker. Okay, it's actually moving sideways rather to the upside with all of those markets. So what is this? This is the US dollar index versus Mexican peso. So in my opinion, dollar Mexican peso will potentially see a break to the downside as soon as these markets or dollar in general will show a top. Maybe this will, of course, be caused by the 10-year US yields, which are now targeting maybe new highs for a fifth wave. But then if we're starting to see our reversals by the end of the year or maybe start of the next year, I think that all of the markets, obviously Aussie, pound, CAT, all of those could potentially see a recovery. And at the same time, I would then be looking for a break through the support on US dollar versus Mexican peso, because you can see that there is a much more sideways price action rather than a bullish one. So it's very hard for me to see dollar Mexican peso breaking higher if this is not happening right now, when we have US dollar index or US dollar in general very strong. So Mexican peso, of course, maybe it has something to do with interest rates in Mexico. They are much higher in the US. But if the Fed at some point will be forced to step back or slow down a little bit, maybe at the start of the next year, maybe after next hawkish, maybe after next higher interest rate decision, then maybe speculators would already be looking for end of this policy, and this could potentially make a top for the US dollar, and that's when US dollar Mexican peso could break to the downside. But now let's take a look also on the wave count. So what is the wave count? Well, I'm looking here firstly on a big chart, big scale. Notice that we are potentially making a very nice 5-wave drop here from 2020 COVID spike. So these 5 waves down and now sideways consolidation. Well, this usually represents that we are just posing down the current drop. So when correction is finished, we should expect more weakness. And what I like these levels here when in February, when we had this massive turn to the upside, when pandemic actually broke through. So this is the level that I think we could see as soon as US dollar index would maybe just turn to the downside into a temporary pullback, not US dollar index, but in general, the US dollar. So I'm still looking for a break to the downside, could be a wave C, could be something else. But I think that this is a very valid target, especially when US dollar would really face some strong resistance. So I'm looking for that level, maybe to be seen in next year. Now looking at this wave B a little bit closer, well, I'm tracking a potential ABCDE triangle. Okay, that's nice, ongoing, perfect triangle. And we are already seeing prices trying to reverse down from the upper side of this trend line. But again, there's still not a breakout point. There is a trend line support that comes in around 19.80 or 90, around there, and then you have this 19.70, which should be the breakdown level. If we see a daily, weekly close below that level, then I think that we are going to targeting this 2020 pandemic low. Okay. Also, another thing that is important for dollar Mexican peso, obviously, is crude oil. And as you know, situation between Russia and Ukraine is not getting better. Actually, it's getting a lot worse. And then you have also OPEC, who decided that on their actually first meeting, I think one-on-one since 2020, to cut the production by up to 2 million. So this is something that is driving obviously prices higher. So I think that in Europe they will be having a lot of issues trying to limit the upside on their prices. on the energy prices. But from an Elliott wave perspective, again, well, I know that we have seen a very strong recovery here and then a healthy pullback, but so far that's the only free wave pullback. So I should respect what the market is doing. I've been tracking this potential support and notice that we retested these highs back from September 2018, and we are reversing quite strongly away from that level. Also looking at this price action a little bit closely, notice that this recovery that we are currently seeing is coming out of an ending diagonal. We've been tracking this one very closely, members, and what we are seeing is that this is an impulsive price action. So I think that there is room for more upside after any pullback. Definitely 97.50 could be a very valid target for this week, maybe even 100, but then just be aware of the next next setback here, potentially even for a wave 2. Could be only wave B, who knows? But generally speaking, I think that there can be more upside after any dips. Now, looking at the dollar Mexican peso, obviously on the other side, if we are keep moving higher here in crude oil, just be aware that this breakdown maybe is not far away here on dollar Mexican peso that I already covered earlier. Okay, traders, thank you very much for attention. I hope that you enjoyed this video. If you want maybe more free updates or whatever, please leave me a commentary, or any market if you're interested in, please leave me the comment below this video, and maybe I will look into one of the markets in our next free video. Thank you. Bye.